Hello and welcome to Free Lunch here at Zacks. I'm your host, Ben Rains. The S&P 500 and the NASDAQ both closed at new records Wednesday, and the Dow was inches away. All three major U.S. indexes then climbed again Thursday to extend their solid start to February. Wall Street appears to have been impressed with the movement so far of these companies and seem to move on from coronavirus fears, at least for now, as earnings come in stronger than expected. Along with solid quarterly earnings results from some of the biggest companies on the market, including Apple and Amazon and Microsoft, the U.S. non-farm private sector added 291,000 jobs in January. This blew away economists' expectations, with small and medium-sized businesses helping drive the growth. Moving on, the U.S. trade deficit in 2019 fell for the first time in 6 years, amid the trade fight with China. Exports declined for the first time since 2016, while imports slipped even more. This pushed the overall trade deficit down 1.7%. Maybe more importantly, China wasn't the largest trading partner last year. In fact, China fell to third place behind Mexico and Canada. With this in mind, China said Thursday that it would cut in half tariffs on $75 billion worth of U.S. imports. The move is part of its efforts to comply with the Phase 1 trade deal. As far as earnings are concerned, Qualcomm's sales climbed 5%, and it topped both earnings and revenue estimates. However, the chipmaker stock fell over 2% in morning trading Thursday after it provided a mixed outlook. Meanwhile, Grubhub stock also fell after the food delivery firm posted a quarterly loss, which also fell short of our estimates. Grub stock fell as it expands and fights for customers with discounts in a crowded industry. Meanwhile, Twitter stock soared over 15% after the social media firm beat revenue estimates, with sales up 11% to over $1 billion for the first time in company history. Plus, the company added 7 million monetizable daily active users from Q3, which crushed estimates. In looking ahead, user growth will continue to be the main focal point for Twitter. After the closing bell, all eyes will be on Uber. The ride-hailing giant has struggled since going public in May 2019, down 10%. Uber's losses have grown as it fights to expand amid price wars against Lyft and international rivals. With that said, Uber executives expect to post adjusted full-year profit in fiscal 2021, and they have recently cut costs through layoffs, and they sold a delivery operation in India. In the long run, Uber wants to be the Uber of everything for transportations, with executives painting a picture of a driverless automotive future where people own less vehicles. Our Zacks estimates call for Uber's Q4 revenue to come in at $4.07 billion. Meanwhile, Uber is set to post an adjusted loss of 68 cents per share and an adjusted full-year loss of $6.71 per share. Peeking ahead, Uber's adjusted fiscal 2020 loss is expected to shrink to just $2.36 per share on 32% higher revenue growth in 2020. Uber has also seen its earnings estimate revisions trend upward, which helps it earn a Zacks rank number 2 buy right now. And the stock is up 40% in the last 3 months, which means Wall Street could be expecting big things. And that does it for the news portion of Free Lunch, but stick around for today's new Zacks rank number 1 strong buy stock. Welcome back to Free Lunch. Today we're breaking down why Western Digital is a Zacks rank number 1 strong buy stock. Western Digital is a data storage devices and solutions firm, and the company recently posted stronger than projected Q2 fiscal 2020 earnings at the end of January. On top of that, the firm provided upbeat guidance and pointed to improving flash memory prices as part of the reason for the positivity. Western Digital had been hurt by the cyclical nature of the industry and flash pricing, but its outlook appears strong going forward. So now we're going to take a look at the company's website. I like to start with a simple overview of what they do, but as we mentioned, they're in the data storage business, in memory solutions business, which is only going to grow going forward as everything becomes digitalized. So if you want to look into more of what Western Digital does, feel free to do that, but we're not going to dive into too much more of the business side at the moment. So now we're going to go ahead and take a look at the company, some more of their fundamentals. We're going to go ahead, well, since it's up here, we'll start with this, which helps put into perspective of their growth estimates going forward. So the most recent reported quarter, which was Q2 of 2020, their revenues were flat, which actually looks really strong compared to they had 5 straight periods of quarterly declines on a year-over-year basis, which also saw their earnings head heavily in the wrong direction as well. So this puts into perspective what we're going to see going forward, which is some growth on top of what we've seen recently, which was flat this last quarter, the recently reported quarter, and then 5 straight periods of declines before that. But looking ahead, it looks to be strong. So now we're going to quickly look at their just overall performance. So this is over the last year, and we can see that WDC, which is their ticker, is up about 44%, which is easily outpacing its industry's average of about 3.2% growth. And we could see that over the last 3 months, they've really gone in the right direction, especially basically near the end of, or the start of December, they've really headed in a hugely upward direction, up about 29% over the last 3 months. So we'll see if they can take that momentum going into the rest of 2020. And then we'll quickly look at we'll do trailing, actually trailing 12 months won't be great. So we're going to go ahead and look at a different valuation because they were not doing well. So going ahead, we're going to see that their valuation is slowly coming down. It was up way high after their earnings were not looking good, and we can see that this is a part of a reason that their earnings revisions are trending upward, so their valuation is coming down to trade more or less relatively in line right with their industry's average at about 15.9 times forward 12-month earnings at the moment. So along with that positive stock price movement, their valuation is actually trending heavily in the right direction as well. So now we're going to go ahead and take a look at some of their estimates. We can see that for Q3 2020, we're calling for about 15.6% top line growth, and then massive bottom line growth, which once again is coming against easier to compare periods, but we're calling for about 470% growth in the bottom line, from 17 cents per share to 97 cents per share in Q3, and then 21% top line growth in Q4 to about 4.4 billion, and then a whopping 670% top line or bottom line growth from 17 cents per share in the year ago period to $1.31 per share. And this top line growth is expected to push their fiscal 2020 revenues up 2%, and then looking ahead to next year, we can see that growth looks to be continuing with 13% growth in 2021. And then despite the brief pullback, once again in 2020, which is even less considering that Q3 and Q4 are headed in such upward direction, that 2021 looks really strong. We're calling for about 120% bottom line growth there. And we can also see that since they reported their Q2 results, most of their earnings estimate revision activity has trended heavily in the right direction, especially for the current year, fiscal 2020. And we should also note that along with their growth outlook, the company currently pays an annualized dividend of $2 per share for a yield of about 3%, which is really strong. It's far better than the 10-year U.S. Treasuries average at the moment, and pretty impressive for a growth-focused industry like computer storage devices. And speaking of that industry, it's resting the top 21% of our more than 250 Zacks industries at the moment. We should also note the company has an A grade for momentum, and once again is that #1 strong buy stock for Western Digital. So that does it for another episode of Free Lunch. Make sure to also check out our new Zacks.com/promo page for a look into some of our services, portfolios, and more. Also, make sure to tune into Paper Traders, which is live at 11 a.m. on Wednesdays. Once again, I'm your host, Ben Rains, and we'll be back next time with more up-to-date market news and a new top stock pick.